Hey listeners, it's Paul Andriola here. Why not join our community at Small Cap Discoveries, where we offer our members direct access to some of the best microcap investment opportunities available. Our members are getting access to premium microcap financings, research reports, and direct access to management. Sign up today at www.smallcapdiscoveries.com.
Hi, everyone. Welcome to the Small Cap Discoveries conference call. Today on our call, we have the CEO, Matt Gowanlock, and the CFO, Orson Ross from Cleantek Industries. Cleantek Industries trades on the TSX Venture Exchange under the symbol CTEK or CTEK, and it trades on the OTC under GLKFF. The company is currently trading at 18 cents with about 28 million shares outstanding, or about a $5 million market cap. I'd now like to hand it over to Paul Andriola.
Hey, great. Thanks, Trev. Yeah, good to see you again, Matt. It's been a couple months since we spoke a little while ago. Cleantek Industries, a company that came up on our screen 5 or 6 months ago. So really excited to get to know the business a lot more and introduce it to our network. So I'm just going to hand it over to you. You got your presentation. I'll let you go here.
Perfect. Thanks, Paul. Yeah, appreciate you guys having us here. So for everyone, I'll just flip through our slide deck and then we'll get into questions after. And this is our June 2023 corporate outlook that we published. So as always, our lawyers always like to say hi in there. So a bit of the company overview. So Cleantek was founded back in 2010. We're founded with 2 primary product divisions. So we have our waste handling division, or wastewater handling division, sorry, and that is primarily our ZeroE technology. And then we have our lighting division, which is made up of a variety of solar hybrid light tower solutions, as well as a crown-mounted halo lighting system for drilling rigs. So, as Paul mentioned, we are traded on the TSX.V under CTEK. So for facilities, we are throughout Western Canada and throughout the lower 48. So we do have offices in Grand Prairie, Calgary, and Crossfield, also out in St. Clairsville, Midland, Texas, and then we're just opening 2 more offices that I'll show in a further slide, but in the Rockies area in the States as well. So a little bit of who we are. So Cleantek was founded on 3 primary principles. So one is we want to develop products with strong barriers to entry, whether that's first movers, patent portfolios, or trade secrets. The second is we want all of our products to make a positive impact on the environment, just through the responsible development of the technologies we create and how our clients use them. And then the third, which we find is always the most key, is we need to provide a commercial advantage for our clients. Because no matter how green and innovative you are, we truly feel that if you can't provide that commercial advantage, you're not going to be able to scale that as you grow. A little bit on our leadership and governance. So you have myself, Matt Gowanlock, President and CEO. Also on the call, Orson Ross, our CFO. Chris Murray's our COO. He's traveling through the US at a couple conferences this week. And then for our board, I won't point out everybody, but a couple key ones to note is Rick McCarty. So from the Spartan Delta franchise, he's been key since our RTO, really supporting the company through the board and his governance there. Paul Colucci's also on the board. He's from Pillar 4 Capital. So they're our largest shareholder through Pillar 4, the Pillar 4 Fund. And then we've got, a couple other guys from different necks of the wood. But at the end of the day, a very seasoned, supportive board. So they've been a great group of people to work with. So we'll kind of touch on, our name's Cleantek. So one thing that, you see a lot of out there is a lot of greenwashing, a lot of talk about the ESG creative benefits of people's products, where we wanted to take that to the next level. So over the last 6 months, we've been working with a professor from a local institute to get ISO certification and Alberta tier qualified calculations so that we can actually quantify and monetize the ESG benefits of our product lines. So we're on our kind of final stages of that right now, and we're expecting to roll that out in the next couple months. But basically what that's going to allow us to do is to have certified calculations to quantify all of our ESG benefits. And in Alberta, we're going to be able to claim carbon credits for our clients. So we'll help monetize that ESG piece for our clients. And then we'll be running that whole process. So it's going to be another revenue stream for us as well. So again, different areas have different programs, but in Alberta, it's the tier program. And then in the US and some of the other provinces, it goes more off the ISO standard. So we're just in final strokes of getting both those set up. So it's pretty exciting for us and our clients. Okay, I'll jump right into so this is our ZeroE technology on the water treatment. So one of the big things about this technology is that makes it so, revolutionary and environmentally friendly is we're actually taking waste heat as our primary energy driver to complete the treatment and vaporization of different industrial wastewater streams. So a little bit about the technology and how we've come up with it. So we've invested over $10 million to date in capital assets and in the R&D to prove out the technology. It is a bolt-on solution. So whether you have, drilling rigs where we're putting a unit on or a full-scale permanent gas plant, we're able to come in there on existing facilities and bolt right on. So very non-intrusive. And then there's also the ability to design it right in up front. So greenfield, brownfield, we've got applications across the board. So at a high level, you've got your producer out there, because a big application for this is the produced water and on the drilling space. So they're going to be producing their gas, and along with the product comes their water cut. So they'll separate that typically at the gas plant or one of the compressor sites. And so they've got all their product in one area where they're shipping that down the pipeline, and then they have a massive amount of water they're left to deal with. So what we've been able to do is we've created a technology that uses the waste heat off their compressors, and through our process, we're able to treat and vaporize their produced water right at the point of collection. So it avoids them having to truck it or dispose of it at third-party facilities. So it's trucks off the road, less injection required, and we're able to do that at a cost savings to our client. So I'll get into kind of the different models that we have of the ZeroE. So the first one is what we call our DZeroE. So it is a mobile unit that typically these are connected to generators. A big market that we're in right now with these is on the drilling space. So these units will get connected right into our client's drilling rig, and using the waste heat off their diesel engines that's running the rig, we're able to treat and vaporize multiple water streams that they create during drilling operations. And another benefit of how this works is the way the water interacts directly with the exhaust stream is we end up scrubbing over 50% of their diesel particulate out of the exhaust. So you're getting, a free energy source to treat and vaporize your water. And at the same time, you're actually scrubbing and cleaning your exhaust. So these are a great unit. We've got about 35, we do have 35 in the fleet right now. Half of those are in the US. Predominantly in the Permian and the Haynesville, so in East Texas and West Texas. And then the rest are up in Canada. We got a strong market on both sides. We're seeing about a 40% utilization, give or take right now. And we do expect that to increase as we come out of breakup in Canada, and the US market continues to adopt this technology, because we just launched it into the US about a year ago. So to be able to move half our fleet down there, I think it just shows a strong adoption of this technology down there. So another unit to help complement the DZeroE, and again, this is a picture of a DZeroE for clarity. But what we've done is we've retrofitted some of our older units. They were called clean steams. So we used to have a unit that instead of using a waste heat, it would use diesel as its primary energy driver. And that's, running the economics on it. It doesn't have that ESG accretive nature that we want to see in the market. So we're converting them over to a gas-fired unit. So the benefit is you don't need to have that waste heat source right on site. Like if you're not running generators or it's just not available, we can actually use waste gas. So like flare gas, or even fuel gas if they've got wellheads on location. we're able to use that gas source as our primary driver for the energy. And same type of process, we're able to treat and vaporize the water at the same time using a waste gas source. So it changes how the clients report their flaring, because instead of a flare gas, it comes into a fuel gas. So there's some ESG accretive savings for them on how they're burning their gas. Plus, it gives them a way to treat and vaporize their water. So again, the nice thing about this one is you don't need that waste heat source. So we're actually in construction right now of our very first unit on the burner side. Again, the rest of the technology is very typical throughout the product line, but we expect to launch this in late Q3, and we already have clients lined up to take the first units. As the first unit is out there, improves itself, we will be looking to convert additional units. And currently in the fleet, we have 40 units that we can retrofit at a relatively low cost. So we're talking a full retrofit for us is about $60,000, and we're renting them in that $300 to $400 a day. So a very fast ROIC on that investment. So again, we don't want to build out 40 day one. So we're going to get the first ones out there, prove it out. And then if there's any changes to be made, we'll make them then. And then we'll continue to roll out that fleet. So this is a very exciting new product, and received a ton of interest from clients. So getting into the larger facilities. So this is one that we've got, we've been working on this one for a while. We call it the PEoE, and this is our larger scale system. So it can handle larger volumes of water, larger volumes of waste heat, and more complex water streams. So this unit here in this picture, it's out with one of Canada's largest gas producers, and it's on a 9-year take-or-pay contract with minimum volume commitments. So for this producer, we're actually taking all their produced water right where they separate it from their product, and we're treating and vaporizing it, and we've reduced their haul-off volume by about 85%. So we're able to safely treat and vaporize all that water. This unit to date has done approximately 25 million liters of water in the last 2.5 years. So it's been out there, it's been working great. It is the first of its kind, this one. So there's been a lot of lessons learned for us to really dial that process in over the last 1.5 years. And yeah, we're from a operations, maintenance, and output standpoint, we're very pleased with this unit. So this one's a lot longer of a sales contract, because these are, like the other units are more of a rental item, where this is, like I said, these are long-term take-or-pay contracts. We operate these as a BOO model, so we build, own, and operate. Yeah, and I mean, we're still getting a lot of interest with these. With supply chain and inflation over the kind of COVID and where we are now, we are struggling to make the economics on this one go around where we want to see it. Like, we're looking for a minimum 30% ROI, or IRR, sorry. So like we're working on the engineering right now to bring the cost of construction down. So that we expect to be done kind of by the end of this year. And that's where we'll go out marketing this further. Right now, we've kind of pulled back a little bit because, again, we don't want to be selling products if it's not going to give us the proper return. And we know this one has a market. We just got to dial in the engineering a bit more before we go out to a larger market with it. Okay, getting into our lighting division. So we've got, I always like to show that picture. That's a picture of one of our Halo crown mounted lighting systems. And as you can tell from that picture alone, it lights up your entire lease like daylight. So I'll get into these products here now. So the Halo lighting technology. So this is one of our strongest revenue earners by far. We've got a fleet of about 170 units today with these. We're continually to build. We continue to build more in our fleet. They are an extremely fast ROI. We're paying these back in less than 6 months on rentals, and they really have become the industry standard in rig lighting. We're on about 15%, give or take, depends on the day, of all the drilling rigs in US and Canada operating. So we've got great market penetration. We are the name brand out there for crown lighting. These systems are all custom designed in-house. So we have a strong patent portfolio on them. We do have a competitor in the US with these units, but we do consistently beat them out project after project just due to our technology. So weight is a big issue with these units, as you can imagine, when you're putting them on the top of a drilling rig and then trying to stand that drilling rig up. Any weight you add to the top is it's exponential impacts to the rig itself. And with our systems, we are by far the lightest weight on the market. And that has seen us get extra market penetration just because of that. Some of the growth opportunity with the Halo. So as I mentioned before, we got North Dakota and Wyoming offices that we're just opening up to service the area in the Rockies. And that's Colorado, Wyoming, North Dakota is what we're considering the Rockies. And it's got about 90 rigs operational there right now. And we've just been so busy with Texas, PA, and Western Canada. We haven't put much of focus there. But with our fleet increasing, we've got the capacity. We're starting to stretch out there. And then for global opportunities, the one thing we've seen over the last couple of years, we've been getting more and more interest as our Halo becomes, like I said, it is in North America, the standard in rig lighting, and now it's globally being starting to looked at that way. So we actually have a trial request in Saudi Arabia and in the UAE right now that we're working on. We're working through the contracts. So there is a massive market to sell these units globally. And over the next, by the end of this year, we're looking to have some trials in place in some of these Middle East countries. And then in 2024, we look to move right into a sale model. So that is a massive upside that has not been forecasted into the company to date. But on those units, with us building them in-house, there's a very large margin on them. And we feel there's a great opportunity for the company to experience some rapid growth over the next couple of years just through those sales. Okay, jumping into our solar hybrid technology. So we have a couple different units pictured here. This is our solar hybrid that runs on kind of the old AGM style battery, so very robust unit. And then one of our newer units is our solar hybrid LI, which is a lithium ion powered battery. So the nice thing about our light towers, our solar hybrids, is they have an engine, batteries, and a solar panel. Some of the systems you see out there that are only running solar, there's just not enough power available that you can put in a compact footprint to get a lot of light out of that. So we've married up the generator with the batteries and solar panels. So no matter if you got cloudy days, that generator will come on, top up the batteries within a half an hour, and then that generator shuts back off and it's running on solar and batteries again. So these are reducing emissions and fuel usage by upwards of 85-90% to your conventional light tower. And we've got about a fleet of 160 of these units plus some stadium towers on top of it. And we've been running these for a while, and they've got great adoption throughout Canada in the drilling industry, construction, agriculture. And over the last year, we've started to deploy some of these down into the US market as well. And we're seeing great feedback there. So we are just continuing to increase utilization on these product lines. One thing that I'll jump into real quick that I got a bullet point here is on to help continue to increase market penetration and utilization. We've added a new product line that we're calling CTEK. So this just launched in the last few months, and it is a 4K remote monitored camera security system. And the nice thing is it bolts right onto our existing light towers. So it increases utilization of our existing fleet while adding a new revenue stream through the CTEK line. So these are satellite connected. So for remote locations, they work fantastic. There's options to either be 24/7 monitored by humans, and as well as AI managed, where you can get alerts automatically sent out to you. The cameras track license plates in and off site. We're also working on a full suite of remote sensors that just package right up with this, from weather monitoring, H2S, different gases. So this is a market we're just starting to explore now, but the feedback we've got from our clients so far has been fantastic. So we've got 10 systems that we built over the last few months, and they're all either working or spoken for at this point. And we are fully expecting to continue to grow this market segment over the next several years. All right, I think I've said my piece. I'll kick this over to Orson.
Thanks, Matt. So start off with our financial highlights. We've had some pretty good growth since going public in October of 2021. We did grow revenues in 2022 by almost 50%, right at 49%. And we are expecting to continue to grow off of that for 2023. Expect coming around that $14.5 to $16 million number. We have done 2 quarters of reporting now, and that revenue is tracking right in that line with that. So it's been a strong start to the year. From an EBITDA perspective, we did have $4.7 million of EBITDA last year, which is adjusted EBITDA, and really was adjusted for our patent litigation. So we did have a patent litigation issue in the US with one of our US rival, where we had to defend our patents, and we're successful in that, right? But it did cost a bit of money, which really brought down our EBITDA. But adjusting for that, 4.7, we're expecting to come in that 5 to 6 range. After Q2, with strong revenue, EBITDA is a little bit behind that. Q2 is traditionally our softest quarter, just given the Canadian spring breakup in the Canadian environment. But we do expect a strong finish to the year to make up a lot of that ground. And we are investing a little bit into the capital. We built 30 new Halo systems over the last couple of years. We are adding to our fleet with the CTEK, like Matt walked through, as well as our first gas-fired ZeroE, ZeroE, which is coming out, like Matt said, end of the 3rd quarter. So minimal capital spend on the fleet to maintain, adding some new assets to it, and expecting some strong revenues in EBITDA. So in terms of our capitalization ownership structure, last this is updated, share price was around 14 cents, we're at 18 now, market cap's around 5 million, 27.6 million shares outstanding. Our largest investor is still Pillar 4, who is private equity. There's the largest investor and most supportive, as Matt mentioned. Paul is on our board, and they work with us very closely. The board is also very supportive and helps us out in a lot of the things in the oil and gas energy sector, as well as getting us into new customer contacts. So we are fairly closely held, another 20% in institutions and family offices. So there isn't a lot of shares trading on the market right now, which is something we're trying to get a little more liquidity moving on, but a very strong supportive shareholder base. We do have a pretty strong balance sheet. We do have a $2.5 million line of credit, which we are drawing on as needed. This is last updated March 31st, but at June 30th, we had about 1 million of liquidity still remaining there as well. So managing through our capital spend and managing through our operations and really investing back into our fleet with funds from operations.
And this is just a bit of a recap on the highlights, but again, patented clean technology solutions. We do have the high margin reoccurring revenue model. And I guess to speak on that, we do see about a 60% gross margin on average across the product lines. And it's about that 30 to 35% EBITDA margins that we end up with. Another thing, strong and diverse customer base. Like we basically, nothing gets over 90 days for the most part. We write up very little to no bad debt. They're all blue chip, really good clients. And then the last one is our experience connected management and board. So we've got a great team we put together over the last few years, and we're really excited to see what we're going to be able to do moving forward. And that wraps up the presentation.
Perfect. Thank you so much, Matt. Let me just dive into questions. But before I do that, just want to remind everybody, if you've got a question you'd like me to ask Matt or Orson, just use the chat function on the side here, and I'll do my best to ask a question. You've got a number of different products, obviously, and services that you offer. Can we sort of one by one get a better understanding what the addressable market is for these things? So on the P0, for example, how much of the North American market do you feel you've penetrated, and give us a sense of sort of that ultimate size of this business for you?
For sure. So for the P0E, that's the one where the market there, it's massive. So there, it's over, I think, 4 billion barrels of produced water annually. So, I could sit here and tell you we're going to have thousands of these units out. Realistically, there's a niche for our product line right now, and it's more in the remote locations where they are trucking to a third-party facility. So we feel that, there's probably low-hanging fruit that we could address, like that we could chase down in that 50 units relatively quick. But as I mentioned, right now, we do need to get our costs in line for that unit. So a couple factors that can play into that one is, as the regulatory environment changes, that could open up the floodgates for that unit overnight. And what I mean by that is, like, Oklahoma is a good example where it's all their saltwater disposal, so SWDs. They're injecting all that water down into deep caverns, and they inject so much of that water on a daily basis, like it's almost unfathomable. And that high volume and level of injection has been linked to seismic activity in every field. So whether it's up by Fox Creek in Alberta, the Permian, Oklahoma, Pennsylvania, like that is an issue they're seeing more and more of. So the Texas Railroad Commission, we were at an event a couple months ago, and the commissioner stood up and said, we are one seismic event away from a massive curtailing of injectable produced water volumes. So something like that happens, all of a sudden, all these producers are going to be looking for alternatives. And from a cost, like, I've got a background in water treatment. I always say it's not whether you can treat the water, it's whether you can afford to treat the water, because you can treat anything. And when you start looking at what you would need to treat produced water, it's heavily brackish, a lot of salt. It's very cost prohibitive. And that's where I think our system isn't, because we're using that waste heat as our primary energy driver. So if there's a regulatory market change, we could see the floodgates open up overnight. If the regulatory kind of keeps going where it is today, we've got a little bit of work to do on our end to bring those costs down, really dial in that design. But I think over the next several years, like, we do expect to be able to get another, 10 plus units out. But that real push from our side won't start until next year. With that said, I got text this morning from Chris, our CEO, who's out at an event in Pennsylvania right now, and he's got several clients hounding them. And so again, it depends on the day. Cost doesn't seem to be as much of an issue in that neck of the woods, but what you'll find from us is we're pretty straight shooters. We don't want to come on here and promise you the world and then not deliver. So on the P0E, I think the market is huge, but it will take us some time to really get that dialed in and move forward. But again, if something changes regulatory wise, that could flip that script pretty quick.
Okay, so let's move on to the Halo lighting systems then. Same question, like how do you sort of tell us the size of the market and how far you've penetrated it?
Sure. So like, I kind of look at the market in the North American space as about 1,000 rigs on a good year. So you got about 250 in Canada, 750 in the USA, give or take. And we like to think we could hit a 30% market share with our Halo system, even with the competitors in the market, just because of, a lot of rigs, they can't handle much weight. So our competitors aren't even an option. And right now, like I said, out of those, I think today we're sitting at about 850 rigs working, maybe a little less. And we're on about 130, 140 of them already. So we've got good market penetration. We're not looking to build 100 of them and just flood the market and create pricing pressure on ourselves. So we're building them, out of cash flow in a consistent manner where we can maintain that high price for our rental rates while continue to gain market shares. So yeah, long and short, I think on the rental side, 300 units is what we're targeting. And then when you look at the global market, a lot of these Middle Eastern countries, like they're government-owned drilling operations, so they're not looking to rent, they're looking to purchase.
Right.
So from a purchase standpoint, we feel that there's that market is well over 1,000 rigs that could purchase a unit. And, if we can get kind of similar market penetration with our technology, even, if you're looking at 300 sales, we think that would be, over the next 2 or 3 years, that would be achievable as well. I mean, it's a good market. And 300 sales, it's a massive hit to our bottom line in a good way.
So I mean, I take it you guys you really follow sort of the activity levels of these drill rigs, right? The more active they are, and certainly we've seen a pickup in activity the last couple of years. You guys are affected by that activity level. So the busier they are, the busier you guys are, right?
Yeah, correct. And one thing, typically we're installing on more of the tier 1 rigs, so the big AC triples. So what we found even through the last downturn is we were installed on some of the best equipment that was out there. And, if the rig count's going to go from 1,000 down to 300, it's usually that 300 are the best rigs that keep working. So we were very lucky that way. And we continue to run the business with that type of mindset.
And then on to the next sort of the last product, the CTEK. Again, is it predominantly the oil and gas sector? I mean, I can see a lot of applications outside of the oil and gas sector.
Yeah, we're predominantly oil and gas at this time, but we are branching out with some of the water treatment technology into mining, agriculture, some of the other, like there are some other good markets out there for us. And then on the lighting tower side, like we've run those in road construction, some of the pipeline construction we're on. Same with CTEK. It's a very wide market there as well. So we are looking to continue market diversification as we move forward.
And then sort of what sort of industry trends are you seeing right now that we might not be aware of? I mean, we're sort of not experts in the space, but I clearly imagine there's more ESG focus on drilling and all the different services associated with that. Is there anything else? Is there government initiatives? You sort of touched on some of the issues around, water treatment and things like that. Is there anything else we should be aware of that you're seeing in the industry?
Yeah, like, I mean, again, the trends continue to lean towards the ESG side of everything. And special oil and gas wants to, show a cleaner face to the investment community. And kind of what I said in the opening with our 3 pillars, like they want the ESG accretive equipment and technology, but they are still not willing to pay, if there's another way to deal with it that costs the same or less, they'll usually go that way. So that's the nice thing with our products is we're not just coming in with the ESG flag, waving it. We're actually able to save them money and still check those boxes. So I think that's the biggest trend we continue to see. And I think from my trips over to the Middle East, I think what surprised me probably the most is they're driving that over in the Middle East as hard, if not harder, than our governments are here. So, I mean, from an optics standpoint, it seems very important for the whole industry globally.
Oh, wow. Let's talk about a little bit about finances. Whether you or Orson answers this question doesn't matter. So you do have about $9 million in debt, offset by obviously cash and some capacity. Do you guys have the financing you need to continue to sort of grow? And the capex that you mentioned, do you feel comfortable that you have what you need right now?
Yeah, like I think we're a little constrained by capital right now. I mean, we're building within our cash flow, which there's some product lines you could advance a lot quicker. But we obviously want to walk before we run. Just coming out of that patent litigation from last year was a big cash drain. So our debt does come due in October. We've had a lot of conversations with our current debt provider, and our expectation is they are going to renew here with us right away. And then that will give us enough runway to get in with potentially a tier 1 lender, one of the big banks, or we may be going out for alternative financing to an alternative lender. But we'll see. Our focus right now is to get one of the tier 1 banks on in the first half of 2024.
Any thoughts about equity? Are you when's the last time you raised money, and would you look at raising money through issuance of shares for that?
Yeah, and I mean, at this point in time, we don't have any plans to, but you know, as we progress into next year, with some of these initiatives we've got working on and a few other kind of things in the background, there could be a potential for an equity raise coming in 2024, but nothing on the books at this point.
Gotcha. And I mean, I saw a bit of a breakdown in terms of who owns the shares, but as far as management, insiders, directors, what's the insider percentage ownership of the business?
Oh, it's been, I know a lot of us have been buying more stock when it was cheap here lately. So I don't have an exact number. I don't know if Orson, if you have a number on insiders right now.
I think it's just over 10%, but like Matt said, that number is growing and changing. All times you'll see the CDI filings as we purchase more, but I believe it's just over 10% at this point.
Okay, perfect. And then just generally, you know, it's you know, you guys are still small. You guys still have some capital challenges. What other challenges are you facing operating the business? What sort of keeps you up at night right now?
I mean, from the base business perspective, like things are going really well. We're seeing the growth we expected. We're hitting targets, so we feel really good there. You know, some guys might not talk about this as much, but you know, like I said, we're a pretty open group. We do like, so last year we were able to adjust away the patent litigation. That's behind us. This year we've got a little bit of legal stuff going on in the background. It takes up a little bit of our money and a little bit of our time. It's kind of all nonsense. It's from a former CEO of ours, you know, that got replaced in late 2019. So there is a little bit of litigation noise in the background. And again, it's super minor. I was here through the whole thing, and I've got very little concern about the outcome of all that. But it you know, it is something. Again, we're a very transparent group, so we call it as it is. So that is out there right now. You probably see some of it even in our financials and some of the disclosures there. So that's out there. Not something that really worries me much, but if I had to pick a headache, that's the one I got.
So something just popped up in my mind here. I imagine you guys have some relatively decent visibility in terms of activity in the oil patch. Give me a sense of how do you, like, I don't know when you guys get told, hey, we're going to be active or we're not going to be active, or here we need one of your units. When do you, what's sort of the sales cycle of these units, and what are you seeing right now in terms of the lay of the industry right now?
Yeah, like we're expecting, you know, it has been a slowdown with the gas prices coming down. So you've seen the US drop some rigs, but we've kept great utilization throughout, and we're continuing to deploy more units. As far as that sales cycle, once you get the client base that we have, I mean, unfortunately, they almost forget to call you to like, oh, hey, we need you on site, and we'll have units that go out the next day because we're already kind of pre-installed, so we can deploy stuff literally within hours. Like I've got calls where, you know, the rig manager forgot, and they're like, we're standing the rig in 5 hours and we're there installed. So it can be an extremely short sales cycle. So a lot of times we're not getting a ton of visibility, but we've got a wide enough client base and a big enough fleet that it's, you know, it's kind of that ebb and flow where you have a couple pieces come back and you'll have a couple pieces go out. So we've, yeah, so there's not a lot of foresight in it, but it is very consistent year over year.
So as investors sort of watching you guys from the outside, what do you think are the best sort of metrics or data points that we should be following? Like I just keep thinking, you know, the Baker Hughes drill rig data, for example, comes out on a weekly basis. That's got to be something that makes sense to pay attention to. But is there anything else that makes sense to watch to give us a better idea how you guys are doing?
I mean, honestly, right now, like rig count is a big determining factor on kind of how busy the market is. But when you watch, you know, when you're watching us specifically, if you're looking at, you know, the revenue targets and EBITDA, I mean, that kind of tells you the picture of how things are going.
And you mentioned there's seasonality in the oil patch, especially up here in Canada. So you guys are now going into a busier part of your season. Winter's going to be significantly busier for you as well. So So it looks like to expect a little bit, higher sort of utilization and revenues into those months and quarters. Is that correct?
Yeah, correct. Q1 was a record for us. It was fantastic. Q2 definitely softened up, and into Q3 and Q4, we're already seeing the revenue growth. So yeah, we're
Perfect.
be on target.
Perfect. Well, listen, I mean, is there anything we missed? Is there anything that we haven't asked, or you feel you haven't covered, or do you have like a key message you want to make sure everybody walks away with today?
Well, I guess I seen someone mention about some shares that Pillar 4 might have sold in the market. I had the chat open. So I guess on that, like, if you're following our shares, about a month ago, we moved quite a significant volume. So we actually had to find enough shares to bring a few more anchor investors in. So we had some interest with the share price. So that is why Pillar 4, they let go some of their shares just to be able to to get a big enough chunk to bring another party in. So I think that we got a very strong and supportive share base from all of our investors. And again, that would have been all that movement you seen about a month and a half ago. It's just we got people following the story, and they wanted to come in, but they wanted a meaningful chunk. So we had to go pry a few shares away from people to get it there.
Good. Well, so more to that then, like, guys like us are now harassing you and asking you questions about the business, but are you seeing a pickup in interest from the investor base? Clearly, somebody wanted to buy shares, but what is your phone ringing from investors right now? Yeah,
like, I mean, we're always getting calls, always getting questions. And what we're seeing right now is a lot of kind of guys like you guys, new people coming into the story that see where the share price is, see the opportunity in front of them. And there's a lot more interest from new guys coming in. And then we consistently update our shareholder base. So there's good communication there as well.
Perfect. Well, listen, I think I've covered off all my questions, and you did catch the last one that came in from our audience. But is there any sort of key thing you want to make sure that everybody remembers as we sort of wrap up this conversation? What's a key message for everybody today?
Yeah, I think my key message would be, like, I think we're a smaller cap company, obviously, right now, but between the name, the team we've got assembled, the board, we're looking to make some big moves over the next little while. So, keep an eye on us. Expect some big things. Perfect.
Well, on that note, we'll wrap up. I want to thank Matt Gowanlock, CEO of Cleantek Industries, and CFO Orson Ross. Guys, thanks for joining us today, and we're certainly looking forward to catching up with you guys in the near future.
Yeah, appreciate it, Paul, and thanks for everyone for sitting in and listening.
Yeah, thanks for having us.
Thank you. Bye for now.
Bye.
Take care.